What's happening, guys? Another Sunday scan coming at you. I did a little bit of preparation this time for the sun up there until we end up building here, and I have a better office without sun just shining in on my head. But hopefully it doesn't fall down on me. We'll see. But first and foremost, one of the questions I always get is, are you just saying that it's a hot market just to appear like small caps are hot, just to maybe entice people to be part of your room? Absolutely not. Last week was the craziest week we've ever seen. And yeah, it's been continually hot. But for me, I have troubles with weeks like last week for more than one reason. Sometimes if I'm on the long side and I get that move, I mean, it was hard to do wrong last week, but for me, thin names, huge ranges, I have trouble sizing just because, I get stubborn. I know that about myself. I'm aware of that about myself. So even when we have these big opportunities on these crazy runners, typically I let everybody else figure out the top. And, you see how patient I am, and let everything happen, let the exchange come in, the transition. And basically what that means to me is, you let all the action happen to the upside where you don't know how high it can go. Let it have some type of huge volume exchange, let it pull back a little bit, let it fail again, kind of retest and fail. And if that transition holds where the volume was before, then I'm more confident with taking the trade. But still, I'm not confident about taking massive sizes on these types of trades just because I know myself, and, these outlier trades are the ones that, really can either make or break you. And so that's kind of what we discussed in the pre-market, each broadcast last week, Wednesday, Thursday, Friday. If you're new, avoid, right? Avoid DWAC, avoid fun, because if you're right, great. If not, and it does something crazy, then you get smoked. So I personally am frustrated from last week just because I had this whole plan in my head that the next Kodak, the next WKHS, meaning the next time Trump is involved with a stock, to me that's a no-brainer, like almost all-in type of situation. And, I don't know. I had this bias coming in, and it was actually a long-sided bias. And my bias was that I thought that, it was going to come in, trap, kind of squeeze out, trap on the way down, and kind of close weak. And then I wanted to make sure that I was there over the next 2 days. That's exactly what I said pre-market, that I wanted to, watch, not take it off radar, and kind of almost anticipate that it's going to have weakness and appear like it's not going to do much, and then make sure that I watch it Monday, Tuesday, because we could have that T+2, liquidity trap, some type of crazy blow-off move. And about 30 minutes later, obviously, it just continued to go and go and go and go. So, I actually traded it from the short side. I had some really good shorts, and then I was starting to get confident in the fact that I had some great entries and great exits. I was seeing it well. The levels were perfect. And then I covered half, and I was like, you know what? I'm seeing this thing so well. I'm going to leave a little bit on, and then, I'll scale into that trade. I'll see what it does. And you know what? It swiped up, and it stopped me out. And, I did the presentation in Vegas on having that stop in place. And, the reason for that is these outlier types of moves. So PHUN and Kodak and DWAC, obviously. But once you see these kind of crazy moves once, you never want to revisit that kind of action again, especially if you're on the short side. And so I know that it was a tough week for a lot of people. I know that it was a great week for a lot of people. Right? So there's a lot of people that got rich last week. There's a lot of people that broke their accounts last week. But what I talked about at the Traders for a Cause conference was, one, not forgetting about the trades after the trades happen. Two, being patient for the backside, the transition, and all that kind of stuff. And most importantly, risk management and having that stop in place that if you break all your rules, you're still okay. And I think that that was very timely in a sense that it came in handy this week because I got stubborn. Of course I did. That's why I have it. Um, and, it was kind of like, you know what? Sorry, pal, you're out. And, it should have saved me a lot sooner, but there was one issue with it, which because of the average daily volume, the route was rejecting the stop. So I ended up having more slippage than I would have liked to, but it is what it is. So I stopped out on the short side. I got long at 41.90s, and I made it 49, 62, 65, and that was about it. Fun. I traded on Friday, and that was some great opportunity. A lot of the margin requirements change, and that's one thing that for those of you guys that trade at some of the major brokerages like E-Trade and stuff where you don't have a personal relationship, there is risk sometimes where you could have a ton of cash in your account, and I jokingly said, you could have millions of dollars in your E-Trade account and be shorting AMC, and it's like you can literally short like 500 shares, right? So when it gets really, really active, they change it extremely fast, and that's what happened with PHUN and a few others. So the point here is that what you think might be okay risk, sometimes your risk actually becomes margin. So you always want to make sure that you have a proper game plan with those types of accounts, because that could be the difference between a good trade and a bad trade. So keep that in mind. Fortunately, there was no issues with that. They had fun. You could box it. You could there's a lot that you could do with PHUN, but if you don't have a relationship and they change that margin on you, sometimes you could get screwed. But either way, like I said, I feel like last week I let myself down just because there was that opportunity to level up again. I had probably the 3 days in a row top 10 of the year. So essentially, if you take my top 10 days of the year, 3 of those were bang 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 in a row. So I was coming into the market with the ability to risk. If I gave half that back, that's okay. It was worth the risk for this time. Meaning I could take some outsized risk for this opportunity, knowing that I was prepared from Kodak and WKHS, knowing that it was a Trump play, but for whatever reason, it did not register with me until too late that, oh yeah, that was what I wanted to do with that. And, it sucks. It is what it is. And, it's always that next mentality. But, it is frustrating. And I wanted to share that with you because it's not always roses. It's not always, you don't always nail the trade that you expected or were prepared for or wanted. And, I just feel like that was I could have literally doubled my year with just, a couple changes. And, it's definitely frustrating, but there's nothing, and this is kind of, I think, the point of this conversation. There's nothing that you can do about either screwing it up except learning from it, or the fact that you missed it, didn't partake on the upside. There's nothing you can do Monday, Tuesday, Wednesday except reset, refocus, and really zone in on what you can control, and that's Monday, right? So think about that. Be aware that right now the FOMO in the market. I mean, everybody wants the next XYZ, right? So 2 things to realize, or maybe even 3. One is people are willing to pay higher prices, bid stuff up. 2 is people are going to be timid on the short side. So there's going to be some great short trades, less crowded, and probably nice unwinds. I forget exactly what it was, CRTD maybe. CRTD. Yeah, CRTD was another one. So, keep that in mind. I think that, so you got to be watching out for, people paying crazier prices, higher prices. You got to watch out for the fact that shorts will not be as aggressive, probably more timid, and therefore might be a better edge because, as long as you're patient and you're letting that trade come to you, it might unwind further than you think, just like that CRTD move. I think also there's a lot of traps happening right now that you need to be aware of. Mark, I went over in the room, nice trap. Basically, in my opinion, somebody's coming in there, a group, whatever it may be, ripping it up, trying to find shorts, letting it come in, rip it up, fail, try to come in, and they're setting that trap before they move things after hours. So realizing when things can really rip, and also identifying the volume, understanding that, when you got this outlier volume, for example, DWAC or Fun was trading the float, pre-market. So, they did just enough to make it look weak. And that's exactly what happened with AMC. AMC every day was like convinced you it was weak, right? And then in the morning they just whoop, swipe it right through. And that's exactly what happened. It's the same trap. So understanding where shorts are in trouble, and if it breaks over that level and starts to go, you know that they're not out. And then they do that again. They did that on DWAC, they did that on Fun, and I'll go over those in the next segment. But understanding that when to stay away, when your edge is going to be really crucial into year end. Right now, people are very well capitalized. Many people have no idea what they're even doing, and they're rich now, and which is great. These plays are great. Everything's great for small caps, but you just have to learn to adapt and appreciate. Even I think Shibcoin or something like that. I mean, people are rich, and these things are going to continue to go because it's just the way it is right now. People are making money by buying and holding, and that's the bottom line. So a couple other things. SPACs. Everything, there was a lot, BENE as well as everything else that was starting to go because, there was like little Trump, affiliations, whether it was, directly or an appointee or whatever it may be. That's great on the front side of the move. And that's great if it continues to go. But don't overstay. Don't think that it's going to do a DWAC. Don't think that it has to do anything. So on the front side, anything's possible. But don't assume that it has to bounce because it could come all the way back down to where it came from. And you saw a lot of that happen. So just be aware of that because I know there's going to be a lot of them. Right now, it's very easy to promote another stock based off of something else. And at the end of the day, it will work until it doesn't work. And if it doesn't work and it doesn't base, then you need to make sure that you have proper risk. On that same side, PHUN, sometimes you're trading regular size and you think, okay, I'm safe. But you never know. Like it did pull back 50%. It did pull back almost 80% off the highs, So there's got to be some crazy range and you need to watch yourself. But don't be afraid. A lot of my money has actually been made on the long side this year. And there's so much money on the long side. There really, really is. So for me, it's more about capitalizing on the overextensions and using that money to really plug into bigger picture type swing ideas and things like that. If they stop working, like BMRA, I was trying to let that work. I had a good trade from 5 to 7s a couple times, but I was holding that core and it stopped working. It stopped going up. So I don't want to stay oversized. I don't want to force that trade. What I find I get in trouble with is trying to force a bias. Right now, you don't need a bias. Just go with the flow right now. And then last but not least, one thing that I just wanted to go over was, sometimes, a member had PM me and was like, why do you always short XYZ's place? And, as if it's just like me targeting, those types of plays. And I just want to remind you guys that it's a particular setup that I'm interested in. Some type of overextension, something that doesn't belong somewhere, something that has squeezed out, something that is, an outlier move that is kind of played out. That's what I look for. I trade 7 to 10, sometimes more names per day. I focus on 2, as you guys know, that I size into. But for me, it's never about XYZ is on it. This is the reason why. It's never about that. It's about the opportunity. So don't make trades emotional. Don't make trades about other people. Don't make trades about, even newsletters, for example. I used to be in a bunch of different spots, rooms, different things to understand where flow was coming from. And it made me biased, right? I do better at sort of understanding and anticipating action based on tape, based on seeing the real thing. If I know exactly who, what, when, where, why, I find myself thinking, okay, once they get out, then it's going to unravel, and then it doesn't, and then you end up on the wrong side. There's this whole thing where you just need to watch and trade things naturally. Sometimes too much information is too much, and so I cut out all that. I haven't been in any rooms or anything focused on who, what, when, where, why for about a year and a half now, maybe even two, and it's just been a lot cleaner, because then the action that you see is you're interpreting it as you should. It's nice to know when newsletters, Twitter, whatever the case may be on it, when it doesn't budge. But for me, I need to see the action prove to me before I make some type of trade. Otherwise, you're going to end up with a bias that you shouldn't have, and it turns into more of an emotional type of trade than an actual technical type of setup. So keep that in mind, and it's always about the setup and the volume and the opportunity present. So let's get right into scan for the week ahead, and that'll be the next segment. We'll go over a couple of the main watches, but again, it's going to be Monday. And the thing about Mondays typically is they're wild. Everybody wants the piece of the the next big runner. And we're coming off DWAC. We're coming off of PHUN. We're coming off Mark. We're coming off all these big names. So you want to be super, super cautious. Sometimes when you wouldn't chase a particular name, maybe you will in this market. But you have to make sure risk management's in control. Otherwise, you're going to get cut up. So let's get right into it. All right, guys. So first and foremost, I'm not a financial advisor. These are not buy or sell recommendations. As usual, if that's not okay, go ahead and turn it off. This is for informational and educational purposes only. DWAC, obviously we like to have this up just because this is sort of that FOMO index, right? Where one, it's a good index to trade off of, for PHUN and some of these other ones. If this is going crazy, then a lot of other things will go. You saw even things that had nothing to do with it. Everybody just started to go nuts. I think TRTA or TRKA, TRKA went nuts. PHUN went nuts, and CRTD that we just were going over went nuts. There was a bunch of others, but even like IZEA, who knows why? Somebody said something, blah blah blah. They do marketing, so does PHUN. It's going to go to the moon. Sure. There was a point on Friday where it was just tape that I've never seen before. There was action and volume and just DWAC and PHUN. I mean, so it might have been people also taking off other short positions, to raise capital. There's so many things that could have been happening, but literally some of the craziest stuff I've ever seen. And, that's risk. You have to be aware of that. So I think it's good to keep up DWAC because that's going to tell you where people are at, where people are feeling, or how they're feeling about, the ability to chase something and have it be okay. Normally you maybe wouldn't chase a stock up $2 per share, but in a current market, in a particular market, maybe that's just the start. Maybe it's going to go another $7 per share, right? So you have to understand what type of market you're in to understand whether or not there's more or less risk on that chase in this present time. So with DWAC, I felt like it was pretty clean. I know it was a crazy trade. It did trade really clean though. And what I mean by that is by looking at key levels, we even discussed them pre-market, but you can kind of see where it was 81.90 and 81.90 to 82 range is where like the trapping was happening. And that was the line that I gave in the room. If you were going to try to trade this thing, then you need to see it under that level, right? You need to assume that it's going to hold that level. So basically what they did is, each time they kind of bring it down, do a false breakout, come back under, trap, then start to base again and punch through. And on that punch through, that's when the squeeze happens. And that also happened every step of the way, the prior day, where it literally would come, back in, recheck. You can see over here, you've got this little channel, comes back in, rechecks, 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 boom, right through. Did the same thing a little bit higher. You can see the same action here, channel. And then, they kind of build this short position. Okay, it's failing, it's almost going to crack, it's almost cracking, and then bam, right back through this prior top, and it leaves everybody smoked. But it leaves everybody that was on the short side smoked. And so this is what you need to be aware of. And that's how they're trapping. And you can see the same thing again right over here, where you've got this common base, and then you've got this pretty much this peak that they've created. And until you are under this level and break down, you should assume that it's going to hold. You should assume that shorts are trapped. And that's exactly what happened over here. And that's exactly what was happening every single step of the way. You can do it over here. You just keep on doing the same base. You can see they check back in with the prior top, and then they break it through. So I'm not trying to put a million lines on the chart, but you can see how many times they did the same exact things, and how many times they come back and recheck in with prior support levels, etc. So it was a really clean opportunity. That's what I mean by clean. Something that you can use technicals to really understand. And it's in hindsight. Shoulda, coulda, woulda. I'm not sitting here saying that I nailed it, crushed it. I actually screwed it up. It would have been nice, but it is what it is, and you can't get them all. So that said, I'm going to use that as a as sort of a guide for PHUN. For example, if PHUN has a weak open and DWAC has a weak open, and then later on DWAC circuits into a halt, goes into a circuit halt, I'm probably going to go for PHUN. I'm probably going to go for some of these other opportunities, because we should have some type of edge, being able to kind of chase that move. So anyway, this one, it's weak after hours, but just be cautious with getting too aggressive and having a bias that it has to do anything. I think there's going to be a move off the open. I think there's going to be a good trade to take, but we have to wait and see. Same deal with Mark. Mark, like I said in the room, you guys saw, I posted it on Twitter, but over into this parabolic move, I was shorting, and I said I was expecting it to pull back to 160s, but I don't want to get aggressively short. I don't want to expect that it's going to fail. To me, it looks like they are going to probably set it up like a PHUN type situation. So I'll show you the two things, but one was they started to base it right over here. Then they did this false breakout. This false breakout gives shorts confidence that that was it. Time to pull it back. They're going to fail. Fail to follow through. And, finally they survived that last pullback. I mean, the last breakout. And, that was it. Phew, we're good. Not the case. They're just creating that volume. The volume went from 50 million to 100 million. And then from this move, it went to 145 or 150 million shares traded. So they're creating all this volume that they're able to then either soak or trap shorts, whatever it may be. So then they can use that after hours where they punch it. It starts to go. Everybody gets excited because they just know PHUN went. Everybody gets nervous because they're afraid that Mark is the next PHUN. And then they're able to exhaust out. And you can see they ended up pretty much holding this trend line, all the way up. So be aware of that. And until you start to see some type of failed follow through under, key levels of support, be cautious on the front side of the move. So let's go back to PHUN real quick and just take a look at exactly how that happened, right? So we had this huge move, and then it goes nuts. And I think that, got to go back a little bit more. This was right over here. So thinking in terms of Mark, right? So you've got this breakout, pullback, breakout. Okay, phew. You know it's over. It comes back in. They make it weak after hours, and they just turn on the turbo, and it just continues to go and go and go. So you got to be aware that they might be creating these types of traps. That's exactly what I thought on PVDS too was a possibility, but they ended up kind of bringing it right back to this level. Still a watch for me. Still something that's possible that it could squeeze out. I was hopeful that they would have done a little bit better with it, but it looks like they exhausted out in the 180s. And for me to get excited about it, it's got to be over 160, 180s, and you know, we'll see what happens from there. So those are the main watches. I think those are going to be, you know, I think DWAC you need to watch just to kind of understand what kind of market sentiment we're in right now. Mark, I think, would be the trade for me. And then Fun, I think, will have like $1 or $2 type of opportunity in it. So those ones I'm going to be ready for. By the way, before I forget, scans, we give away a month every 4 weeks. So Darius Boga, you got the scans for this week. And thank you for your comment. And yes, I still did Sunday scan with Vegas. Tired, and I appreciate your comment. So next section would be the failed follow through. HUDI really feels a lot like HX. So HX was one that pretty much squeezed everybody out. They had an F1, F1A, you know, the amendment, they're looking to raise, so people start to get a little aggressive, maybe a little bit too much aggressive, betting that they're going to raise maybe overnight, and they obviously got smacked. I had a nice short, covered way too soon. I didn't want to participate pre-market just because, you know, I was trying to be patient, let the exchange come in rather than get caught in circuit halts. But still was a good piece of the pie, but really nice setup and an example of you don't need to be first in to get the meat of the move. Even if you waited 19, 18, you know, it went to 5. So there's a lot there. So same thing with HUDI. This is going to be a super thin trade. You can see how it kind of reacts, but once the tide shifts, once it fails, there's going to be a nice opportunity. So no rush there. This could easily go 16 or 20. I'm not short bias, but what I am interested in is setting price alerts. And when you forget, I forget, etc., it will remind me that, hey, you were interested when it broke 12, right? Because it's probably going to go, say it goes 14, 15, 16 again, and then we just give up on it. Then it's going to alert us at 12, and it's going to be a big breakdown of that prior support level. So that's what I like to do for price alerts. Prague, impressive action, came back. I didn't expect it to come back this well. This is another one where, you know, I think if you get too prepared for it, say off open tomorrow, I think you'll end up missing the trade. But set price alerts, let this thing kind of play out, let it gap up, potential retest of prior highs here from the prior day. And, you know, if, for example, if we were to jump up and test towards this level right over here, draw a line, 320s, you know, push, I'd be interested, possibly. But other than that, be cautious with it. Don't be, you know, too aggressive. And, you know, let's see what happens from here. FCEL, same deal. This was fantastic opportunity. This is one of those, it was just too big. Got really retail crowded. They put in a top 880s to 890s. That's the level that we talked about for quite some time. Each time it retested, it failed. So it ended up being a fairly good trade and opportunity. The best part about it is you could trade options. Options went about 5x, actually more if you timed it properly, but you know, I got about 5x on those. Again, I'm not trading options huge yet. I'm still, you know, just dabbling, getting my feet wet. But when an opportunity like that presents itself, it's a better way than, you know, to be using a bunch of size during the day. And also when it falls off people's radars, I still had the options. So switching gears to the long side on continuation plays. This one I am still long. This had a tweet from the company. You know, they're getting involved with some Bitcoin. I forget what the tweet was, but basically there could be a catalyst here near term, and when and if that catalyst hits, then hopefully it has a breakout over this prior top. I think it's important to, see and understand that 250, 260s is sort of the top right now. So if and when a PR or some type of catalyst comes out, then there might be an opportunity for the breakout. If not going to look to overstay, but I was just letting a good trade work for this current time. SONM, big breakout after hours, so it looks a little trappy, and I think they had just done a reverse split, and it's a relatively thin name. It might be one of those that it's a 4 a.m. ripper, trap into 7 a.m., and then lately they've been kind of pushing it at 8 a.m. So worthy of watch. Could trade it both ways, but given the way the market is right now, if this thing is gapping up 253, people are going to chase it to ridiculous levels, in my opinion. So the reason why it's on watch is because if it's like after hours and it's one of the higher percentage movers, I think that it's going to be something of interest for traders. COMS, this one had a nice big breakout, and so did SGBX. It was another example. An article came out, Trump ties, and everybody just went bananas on it. So I missed that one. I guess that was the one to take. Comms, I had a decent trade on it. I kept some just in case it wanted to do anything crazy after hours, but obviously it did not. Dogs, you guys know this one for quite some time. Nothing that we would be crazy biased about over here. My original entry was right over here. Buyer and tape since. And you can kind of see that each day somebody's in there with like an invisible hand going and grabbing some more. BCYP. BCYP. This one, this is what I'm talking about, like understanding where retail is, and I don't like to pay too much attention to getting biases from it, but this is a great example where, there's a lot of people that were loading up. What clued me in was, this volume over here, and then somebody had posted in the room that a room was on it, kind of shoving it higher. When that failed, just like I said, the 1120 is sort of your level. So if it pulls back and it starts to base there, sure, maybe you've got a trade, but if not, watch out. And you can see once it broke that support, that was basically all of this new chase flow, retail flow coming out. So I did buy some. It's going to be SABS on Monday. But if it doesn't, base over that 850s and start to firm up, then I'm not going to stay very long at all. PBDS, I already kind of hit that. I have a little bit of a position left. I was up a fortune up here, so I bought it on the day before. There was a nice trend. I bought it over this day. And then obviously it shot up, and I added some, and I locked in what I added at the 180s, but I didn't take off the core position. It would have been nice. Like I said, I was up a lot, but it is what it is. And last but not least, alongside CNTX has been a good trader so far. Recent IPO, it's got some crazy volume considering the fact that it's 5 million share offering there, or IPO anyway. So 11 million. 14 million and 18 million. So I'd be watching this one on dips. If you're chasing it, I think that's trading it wrong. I think that you're going to end up kind of bailing into the flushes. I think flushes are opportunities, and I think the rips are also opportunities on the sell side. So, just make sure you've got a plan. I've been trading this one long. I've been trading PBTS long. I've been trading dogs long, comms long, SONM, and KULR. So those are, some of the long side positions. As you guys know, I don't short overnight, especially in this market for sure. But, we'll see what happens this week. But again, if you had a tough week, I know a lot of people had record weeks, and I know a lot of people had record loss weeks, right? And, it's part of the game. Sometimes you got to have that happen to realize that, it's part of the game, and you have to be able to control it. And so that's, the fix, what I recommend is to always have that max stop on your account. And what I talked about in Las Vegas is find that number. So maybe you normally risk $2,000 on a trade, but if you break all your rules, maybe that number's $5,000, where it's just like, you know what? You didn't follow any rules, you're out. and it just takes you out at 5K. And the reason for that is, yeah, it's a bigger loss than your 2K, but it doesn't blow you up, right? You are not in sound mind to make the right decisions. You're already being reckless, right? At this point, it's a gamble. So same deal for me when I had a tough time, in the past. I'm just the most stubborn trader. And these outlier moves, 99% of the time, I'm a great trader, but the outlier moves always will kind of set me back a little bit. And so the fix, what I focus on is having that max stop, so that, it used to be 20K, and then it used to be 50K, and then 100K, and then 200K. And the reason I have that is because it's very rare that I am down a lot on a position. It's very rare because typically I scale into every single position that I have. I start off small and I scale into the winner. I'm not somebody that just comes in and takes huge size and then, that's it. I start in, I scale in if I'm right, I scale in more if I'm right, I scale in more if I'm right. So a lot of times if I do have size, I'm on the right side of the trade. The times that I don't are typically outlier moves, and I know my weakness. And so, for example, that is, how I would suggest controlling your own risk. If you had a tough week, consider implementing it. Call your broker. You can add that max stop so that, bam, it's, that's it. You're out, and you don't have to deal with your emotions and making the right decision while you're also down a lot. And I think that that's what it's all about, capital preservation. And, I'd recommend that. Try it. But that's about it, guys. We'll catch you guys in the room tomorrow. Have a good rest of the weekend, and that's that.